Okay, so thank you for coming to the masterclass on variances. I've got some students and some new students and some prospective students, but whatever, I would like you to sort of participate and ask me questions as we go, because this is all about, informing you and helping you with your PM studies. So what I'm going to introduce you to today is to think differently about variances. I use a diagram technique. Now, some of you may have already seen my YouTube video on it, so I'm not going to dwell on the basic variances. So I can direct you towards that if you want to have a more detailed view of the basic variances by diagrams. So you can apply my new approach to advanced variances, because I think people do find them quite hard. So this is where I'm trying to use diagrams, because I think it helps everybody. Let's now look at operating and planning variances, and we're going to look at particularly the sales volume variance, splitting that. The sales volume variance, this can be split into market size and market share. Now, Carla has received some industry statistics. It shows that a candles market has grown by 200%, sorry, 20%, not 200%. And we need to understand what effect that's had on that sales volume variance. So she's able to now calculate the part of the variance, remember it was 5,000, which is down to planning, i.e. the market size, and what is due to operating, the market share. Okay, so one is out of her control and the other one is in her control. Now let's remind ourselves of how we would have calculated that sales volume variance during my diagrams. Remember, it's the difference between the vertical, the actual volume, versus the original volume. It's the only time we use the original volume, times by the standard contribution. And that gave us 5,000 favourable. So all we can say, without knowing the market size change, we can only basically say that sales volume has increased due to the online presence. She moved online, so she expanded her customer base outside the local market. So that's the only information we've been given in the question before we were told about the market size. So now we've been told about the market size, we can split this sales volume in two. And what we do is we look at the market share and the market size. Now, the original volume needs to be rebased for the market size change of 20%. So the market size, if we'd have known that market size had gone up, we'd have changed our budget to be 20% higher for volume. Okay, so that is a planning variance. When she set her budget, she'd no idea that the market had increased. So she originally decided to budget for 2,000. Okay, but therefore the market share is therefore the difference between that new base budget, the rebase budget, and her actual volume. So the planning is the market size variance. It's actually 4,000 favourable. And the operating market share variance is 1,000 favourable. Although she's still done brilliantly, it's 5,000 in total more, we can now have a better understanding of why that is. One is in her control and one is out of her control. So hopefully by using my diagrams, you can easily see that all you had to do is place a new budgeted figure for volume in between the actual and the original, and therefore you split the variance. Now we can be more insightful. This is the whole point. Why do we bother splitting it? So we can understand what is controllable and what isn't controllable. So the market size of candles has increased due to candles being very on trend, and COVID has seen the expansion of the online market. So that's why the market size has gone up. People are sat at home looking on the internet thinking, oh, it's cozy, it's winter, I quite like to have some candles in my house. It makes me feel happy seeing candlelight. I'm going to buy some candles. The market size went up. So therefore it caused a 4,000 favourable variance. This is out of Carla's control, okay? Although she capitalised on it, she didn't know the market size had also gone up. Now, Carla's market share has increased. This is in her control because she did move online. She moved away to the local market and started selling to the retail market. Therefore, she has created a 1,000 favorable variance, and this is within her control. Okay, this is within her control. So the examiner wants you to understand that the sales volume variance needs to be split between planning and operating, but they also call it this confusing terms, market size and market share. So you need to get it into your head. Market size is external, and that's not controllable by the individuals in the business, whereas market share is internal and is controllable. Okay. Right, so we are going to do an exam question on this, and it's a recent exam question, sample paper that's just been issued. Lots of people who came to me from March sitting who were on a resit kept talking about this question called market share, market size question with a rolling budget. And I kept thinking, oh gosh, that does sound hard. So finally, I've got to see it, and I now understand what the issue was. So I'm going to run through the calculation bit for you. So this is actually the test reach platform. So the first question on this was to explain why businesses calculate market size and market share variances. Hopefully, I've clarified that for you. You calculate market size and market share variances because you want to know what is internal to the business and what is external to the business. And therefore, the market size changing, you cannot control as a sales manager, sales director, but you can control your market share of that market size. So therefore, it's important to split the two to understand what is controllable and what is not. Okay, and therefore you can fairly assess your sales team. Okay, so that's what she wanted from that. And then we've got this question which says, calculate the total market size variance, which is the planning variance, and the total market share, which is the operating variance, for MTC for Q2, 10 marks. So there's a lot involved in this. So let's have a look and see what we're going to do. Remember, first thing you need to do in your head is think, right, I know what I need. I need the actual volume. I need the budget volume. And I need to times it all by the standard contribution. Okay, so that would be my triangle. I know I haven't drawn it, but you can see the triangle effect there. Now, if I'm going to split it between market size and market share, share needs to be split and size from this bump. Always does this in this stupid thing. They don't seem to like my seeing the whole thing. And so in the middle, you need to find the revised volume to be able to do that. And so therefore we then times the difference, we do the difference between the actual and the revised volume is your share, and the revised volume and your budgeted volume is your size. And we times them by the standard contribution. It can make me move. Let me make it move. Okay, so that's what we're doing. So they want the total though. So we got to make sure that if there's two to calculate, you add them up. That was something that is going to be pointed out. So let's now read it through. It says MTC is one of several agents in Citopia, supplying medical staff, both nurses and doctors. Now, information with regards to the market size in Q1. So the nurses' market size was 14 million. So that's a revenue figure, not a volume figure. And the size of the national market for doctors was 8. But in Q2, you can see the market size has jumped significantly for nurses and a small amount for doctors. So that's like a 30% jump, and that's like a 2% jump. So the increase in the national market for nurses is due to a shortage of full-time nurses in Citopia. Okay, so all agencies in Citopia, including MTC, charge a single market rate. Well, that's helpful because they've given us revenues. So we need volumes. So they're basically saying the price for a nurse is 1,000. So I'm just going to highlight that, show you how to use the highlight function. No, I don't want to highlight all of that. No, not all of that. So, okay. And for doctors, it's 2,000. Now in Q1, MTC held 30% of the market for nurses and 40% for doctors. So again, I'm going to highlight those 2 points. So there's your market share, 30% and 40%. Now they use quarterly rolling budgets, and at the end of Q1, it prepares its budgeted revenue figures for Q2. Right, so the budgeted revenue figures are based on Q1's market size, okay? And so what they do is they base the budgeted figures on what they would continue to maintain the market share they had in Q1. So remember, you're at the end of Q1 and you don't know that Q2's market size is going up. So your budget is therefore based on the original market size. For nurses, we're going to say that we've got 30% of the 14 as our original budget. And for doctors, we've got 40% of the 8 as our original budget. Now, just because it's moved, that is a planning variance, market size variance. And then we compare the actual to the rebased market size volume. So that's what they wanted us to do. They've then given us some information down here that there's a standard contribution margin for nurses and doctors of 80. So that's what we're going to use to find our standard contribution. So what you need to do is therefore then compare these actuals to come up with the market size and the market share variance. So the way I would set it up is I would do nurses first, and then I'd do a copy and paste for doctors. You've got the original budget that you want. You're going to have the revised budget volume, and then you've got the actual. That's what you need to calculate. So the way you've got to do this is produce the volume budget from the information you've been given. They've told us that the market share size, sorry. Ooh. Don't know what I did then. Let me just go back. So the market size for nurses on the original budget would have been 14 million. Now I'm going to do it in round thousands because it's easier to see. So you've got to decide what you're going to do things in, whether you're going to actually do it in dollars, millions, or round thousands. And I always tend to do things in round thousands. So therefore, and that is 18,900. Then we're going to take our share of it. And our share for nurses, if you check, was 30%. And so it would still be 30% on the revised one. So therefore, our revenue based on that is going to be 14,000 using the information times that. And then I'm going to copy that across because I'm using Excel, it's quicker. Now we need to take the price into account because we want the volume, so I can get the volume. So the price is 1,000 for nurses. So as I'm doing everything in round thousands, I'm going to make that 1. And then as you can see, you don't really need to divide it, but it's just giving you clarification that therefore that is the volume. And I'm going to tell the examiner I'm going to do everything in round thousands. So it's clear. I don't know why that didn't work. Must do this. And I'm going to make that bold so they know it's nurses. Now all I need to do is find the actual volume. Well, I've been given the actual revenue, which is 53 million. And so the price is the same. So therefore, that one has not changed. Basically, it's a fixed price. So now I have the volume. I've got the original budget, the revised, and the actual. I just need to know what the standard contribution is. And so the standard contribution is 80%. And so therefore, I'm going to be using a standard contribution of 80 cents because it's $1 times by 0.8, which is the original budget. I'm always going to be using that. So now I'm ready for nurses to calculate the share and the size. So the share variance is the difference between the actual volume and the revised volume. So these two. So I'm going to pop it here. It's going to be the actual minus the revised times by the standard contribution. So I need to pop that in brackets so I can then times that by the standard contribution of 0.8. And then the size variance is the difference between these two, the revised and the budget times by the standard. So the revised didn't work, sorry. So the revised minus the original budget times by the standard is therefore the size variance. So I know that one is therefore adverse and that one is favourable. So I've done that for nurses. Now, I don't need to retype all this again. This is where you need to realise that the examiner's expecting you to now copy that. And if you copy that, you then can pop it down here and redo it now for doctors. And you don't have to redo any of those formulas again. You just need to change the figures. So for doctors, the figures are 8,000 and 8200 market size. They have 40% of the market for doctors. So we just need to send that to 40%, 40%. And so hopefully you can see all my formulas are automatically working. The price for doctors is 2 per week. So that's going to be 2, 2, and 2. And the revenue is 3.6, so it's 3600. So hopefully now the standard is now working off the 2. Yeah, so it's 80%, 1.6, because it's the same for both. And because I did the formulas correctly, I've now automatically got my share and my size variance. Hopefully you can see how much quicker that was. You do one and then you do the second one and you make sure you use copy and paste and go through it. So that is favourable. And that again is favourable. But the question said, what's the total market size and the total market share variance? You have to answer the question or you'll be missing 1 mark. So you need to write total share. And remember, spellings don't matter. Total size. And you need to add them up. So the total share variance is going to be adverse plus favourable. And it says minus 40,000. So make sure you write that because that's in round thousands. So now the examiner wants to know that you know that. So it's going to be 40,000 adverse. So make sure you write that out so they know that you know that. And then I would highlight that as your answer. Okay. And then total size, again, I'm going to highlight as my answer and do the same thing. I'm going to add them up. So I've got a favourable plus another favourable. And then I'm going to retype that so they know that I know it's 1240, 000, favourable. And I'm going to highlight that. Okay. So that is 10 marks. And that's what was expected. Now, when you look at the answer, they won't have done it this way. This is my way of doing it. All right. But it will all get marked all your formulas are marked because they see them, okay? And so they'll be able to see if you make a small mistake, they'll be able to follow it through. So if you absolutely, it's so important to label things correctly. You don't have to say how you're calculating the variance. Notice I just did it, and they can see that you've taken the actual versus the revised times by the standard contribution. All of that is really, really important. In fact, you should have written, I'm just going to slap me, should have written standard contribution there so that you know that that is standard contribution. And so all this will get 10 marks. That is how you do that. I'm hoping that has been something that's been really helpful.